China's Shanghai Composite remained volatile today, even after Beijing took dramatic steps over the weekend to support the country's stock market. It has been in a downward cycle over the past few weeks now. Since hitting its high on June 12th, the Shanghai index has lost more than a quarter of its value. Eunice Yoon in Beijing has more on the emergency measures and why investors across the globe are closely watching what's happening in the world's second largest economy.
After a weeks-long stock market correction, the government authorities here came in guns blazing with heavy ammunition to try to shore up investor confidence. Over the weekend, the leaders, including the Chinese premier himself, met and presided over meetings, which resulted in dramatic moves. Brokerages were mobilized to invest in a stabilization fund, IPOs were suspended, and the Chinese central bank was called on to provide liquidity assistance to a government-backed margin finance company that puts money in the hands of investors so that they can buy more stocks. Now, the speculation has been that the leadership here is very concerned about the potential social fallout because many of the investors are new, inexperienced, and are borrowing on margin. The stock market in Shanghai saw massive gyrations. It was up by 8% at the open, fell back, and then closed the day higher by about 2%. Investors have been saying that they're skeptical about the long-term impact of these measures, and many of them believe that the government may have lost control of the market and is going to have to come in with even further measures to rebuild confidence. For Nightly Business Report, I'm Eunice Yoon in Beijing.